This one's going to be an exciting one for me because this is one of my favorite two indicators. And we talk about price action is king. Price action tells the bigger story. That's the thing that's happening in real time. We can understand exactly what's happening behind the candlesticks, behind the candlestick patterns, but then we add in filters or indicators to help us along the way. And the RSI is a momentum indicator. Above 70 is overbought, below 30 is oversold. And what I'm going to do is show you a couple of tricks on, firstly, how to apply the RSI to your chart, how you can use it to your advantage, and how the RSI, in conjunction with price action, works and tells us a story when something's changing on the charts. And we're going to be using the Bitcoin chart in this example. And I've got Bitcoin on the 4-hour chart. Each candle represents 4 hours of price action. So we look at a naked price chart. We understand exactly higher highs, higher lows bullish, lower highs, lower lows bearish. However, if we want to indicate, or we want an indication of something that's changing right now, we can bring up the RSI, we can look at the RSI, and then we can analyze that in comparison to price action. Now, why is the RSI so important? You look at stochastic RSIs, you look at oscillated indicators, you look at moving averages, they are all lagging indicators. RSI is one of the most real-time indicators, which means that we can use the RSI in conjunction with price to get a higher probability that something is going to happen in the immediate term. So the first thing that we're going to do is we're going to click on Trading View on our indicators. And then what we're going to do is type RSI, and you'll see Relative Strength Index. When you click Relative Strength Index, it'll look a little something like this. Just get rid of the old ones. Get rid of that one. You get a little something that looks like this. Now, we talked before above 30. So you've got your 30 level here. Anything below 30 is oversold. And then at the top, you've got your 70 level. Anything above 70 is overbought. So what we're going to do is we're just going to double click this because it's not very clear. What I like to do is just change the color, change it to whatever color works best for you. I like to go yellow, potentially green. Then I like to thicken it so I can see exactly what's happening. And one thing that I like to do, which you don't need to do because you can use the moving average, but one thing that I like to do is take out the RSI moving average. Now, this is dependent on whether you can use this to your advantage. So the one thing I do is take that out because the one thing that I'm looking for is divergences or something on the RSI that's telling us that momentum is changing on the chart. So if we get rid of that, get rid of that, and then that leaves us with this. So this is what the RSI looks like. Another key level that you need to look at is the 50 level. What you can see is when we're above the 50 level, we tend to be trending bullish. When we're below the 50 level, we tend to be trending bearish. So that's what the RSI looks like. We're going to put that in conjunction with price now to try and identify if there's anything that's changing as far as trends concerned. And you can see one thing. We've put in a lower low. We are accumulating. And the first indication that's going to tell us that something's going to change here is when we take out this lower high. So once we've taken out this lower high, one thing will happen. This RSI is going to push up above the 50. Then we can turn bullish, and then we can start pushing up, and then we can start pushing up. So the RSI going above 50 is going to give us an indication that price is going to push up, price is going to push up, and take out that previous lower high, and then start to change momentum as far as the bulls are concerned. Bears are in control at the moment. We're below 50. Bulls are control when we're above 50. Once we take out the lower high, we can start making moves to the upside. So it's a forward-looking indicator when you use it in conjunction with price action. And before we get into the juicy stuff, before we get into bullish divergences, bearish divergences, those are high probability moves, my friend. Those are the things that tell you that something is changing on a price chart. We're just going to focus on the simplicity of this: under 70 or above 70 and under 30. So if we just look and we look, where was the last time it was above 70? It was here, above 70 on the RSI. There's price. What happened? We got a pullback, we got a pullback, we got a pullback into an oversold region. What about the previous time up here? RSI above 70, RSI above 70. What happens? Big crash in price, big crash in price. Where to? Oversold, oversold. That's below 30, below 30. Then we get a push to the upside, and we get a push to the upside. So this is just a simple way of looking. Simple way of looking. What's this? Over 70, massively overbought. Over 70, overbought, push to the downside. Exactly the same thing happens here. Under 30, under 30, push to the upside. So that's the very basic way of using an RSI to your advantage. So if we just clear this up and get rid of this, we'll look at divergences next. But before we get into divergences, on the chart, I just want to explain exactly what is a bullish divergence and what is a bearish divergence. So what we'll do is we'll look at here, and what we're going to do is we're going to apply our pretend price chart. So we're putting in a higher high. We're putting in a higher low. What is this? This is a bullish trend. We're holding the higher low. We're putting in a new higher high. We're coming back, higher low, and then new higher high. That is a bullish trend. Now, this is the RSI. So we're going to use the RSI next. And the RSI is pushing up, it's pushing up, it's pushing up, it's putting a new high, it's come back down, it's pushing up, it's pushing up, it's pushing up, it's putting a new high again. Now, this is a divergence. It's pushing up, hasn't managed to put in a new high where price action's put in a new high. The RSI has put in a lower high. That, my friends, is a bearish divergence. There's price putting in a new high. There's the RSI putting in a lower high. That's indicating a signal that the RSI is showing us that the strength of the buying power is getting weaker, indicating that we're due a reversal. It's very simple, guys. The RSI is a measurement of buying and selling pressure. If there's no buying pressure there and we're putting a new high on the chart, that's showing exhaustion. So it's simple. That's how you use divergences. So we'll do the opposite to the downside. You've got a bearish divergence. Sorry, a bullish divergence in this instance. You're putting in lower lows, lower highs, lower lows. And then on the RSI, you're doing this, putting in lower lows, putting in lower highs, and then you put in a higher low and then a push to the upside. So that is, my friends, a bullish divergence indicating that something needs to change on the charts and the bulls need to gain momentum and push price action to the upside because it's a measurement of buying and selling pressure. So if the buying pressure is there and the chart is reflecting that the buying pressure is not there, that's showing that there's a reversal that is imminent. So that's how you use divergences in simple terms. We'll jump into the charts and we're going to look at some divergences in real time. More importantly, how you can spot a divergence very easy and understand exactly what's likely to happen next on the chart. And the way that this works is uncanny because we can pretty much look at any chart, we can pretty much look at any pump, we can pretty much look at any dump, and we can understand that there's probably a divergence there that would have given us an indication that something was going to change. If we'd have known that indication, we could have adjusted our trade, our investment. We might be looking at get into a trade, get out of a trade, but understanding something is going to change. How is that going to affect your investment? How is that going to affect your trade? So what we're going to do is we're going to go through and we're going to try and find bullish divergences and bearish divergences at the tops and at the bottoms of these trends. So the first thing we're going to do is pull up the trend line. We're going to pull up the trend line and you can see where's the bottom. We've got a bottom here. We've got a bottom here and you can see we've put in a lower high and then we've put in a lower low. Now, if we just bring up the RSI and we just bring up the price, if we bring up the price here, you can see one thing. The RSI has put in a higher low. So the RSI is a measurement of buying and selling pressure. The RSI has put in a higher low. We understood something was changing. Something did change. And then we got a big push to the upside. So we got a big push to the upside. The RSI, bullish divergence, told us that was going to happen. So we can look at that was the bottom. We can look at tops and we can see, is there any indication that we are going to get any kind of reversal at the tops? We can look here. So you can see price action. Price action has done one thing. It's put in a higher high. Price action has put in a higher high. RSI has put in a lower high. Lower high is showing low buying pressure. We've put in a higher high here. That was signaling exhaustion. Then we got a push to the downside. So you can pretty much look at any bottom. You can pretty much look at any top. And you can understand that an RSI would have given us an indication that there was going to be some kind of trend reversal. Look at this. Down, 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 lower low, lower low, lower low, RSI, higher low, higher low. So what happened on the back of that? We understand we got a big push to the upside. So literally, guys, you can find these things anywhere. You can literally find these things anywhere. And it is an indication that something is going to change. And that is one of the biggest things in trading, guys. Simplicity is key. If you use price action and you use an RSI and you only use price action, you only use an RSI, then you can understand exactly how the RSI works against the price action. Nail exactly what it is that you're simplifying and make sure that you're good at that before you're moving on to different indicators, before you're moving into different trading strategies, because you will get, my friends, paralysis by analysis. And that is when you're overloaded because you've got too many things on the chart. And let me give you an example of that. If you've got 10 indicators on a chart and you're looking for a high probability move, and you need 10 different things to happen, you're not going to get any trades. So find out what works for you, simplify it, test it, understand exactly what you're looking at on a price chart, and understand exactly what the implications are when something's changing and how you can take advantage of that. So if you did like this video, guys, let me know. Do you want to see any more indicators? Is there anything that I've missed on this? And I'll see you guys in the next one.